Don't go far, George. You're next. All right, very good. I will set a good example here by checking my phone. Okay, glad I did. Hi, good afternoon. I'm Steve Grundman. I'm the MA and George Lund Fellow for Emerging Defense Challenges here at the Atlantic Council. I am going to hopefully masterly, be the master of ceremonies of this event, which has a number of moving parts that I'll describe. The most important of which will be a panel discussion among four business executives who lead venture investing initiatives in their respective aerospace and defense companies. But the program also importantly includes a short presentation from Miriam Hawk, who is the Director of Research at the National Venture Capital Association, that will sort of prime, or maybe even if I may say it, give us a primer in what is venture investing, what is corporate venture, and how does corporate venture play, at least by the numbers, from and within the aerospace and defense sector. But the first thing I want to do is take the great pleasure of introducing George Lund. George is the chairman of the private equity firm Torch Hill Investment Partners. He is also a vice chairman here at the Atlantic Council, member of the board of directors, and not least, the namesake of the fellowship that I hold and of the initiative, the Emerging Defense Challenges Initiative that I run in the Scowcroft Center on International Security. I've asked George if he would make a few welcoming remarks to us before we continue the program. Thanks a lot, George.
Thank you, Steve. Great pleasure to be here with all of you, and thank you very much for coming. It is great fun to be able to lend your name to something that has a mission that brings together a public policy interest of great importance and meshes that with what's going on in the private sector. This aerospace and defense industry actually is special. This emerging threats namesake that we pulled together here asked Steve to sort of dive into this nexus of where we try to figure out how our public policy in defense manifests itself through our private industry, and in outward facing to the world of threats that are out there. This Captains of Industry series has brought some of the most senior leadership in our aerospace and defense industry to this stage to talk about the challenges that this world brings and that this industry grapples with all the time. As somebody in the investment business and even somewhat directly in the venture business, I can say that the venture capital world can be, sort of likened to threading a needle while riding a bicycle while going down a quite steep grade. And so the people that you're going to talk to here do something that is a somewhat unnatural act because they try to pull that off within the environment of quite big companies with very complex and long-term strategic objectives. So there's a lot of rich experience in front of you today, and I think when you come to the question and answer period, there'll be a lot for you to dig into. I think with that, I've sort of said most of what I wanted to say. I want to thank Steve for the outstanding leadership he's provided in this role that he's had, and with that, I will step aside and let this program begin.
Thanks very much, George. I appreciate it. So I will resume with a couple of more administrative notes. One, I guess, is thematic. Several of you in this audience I know were at what I dare say may have been the last event in this series, which was in April, and which was entitled Westward Ho. I forget the subtitle, but I don't forget the panelists, who were four chief executive officers of small entrepreneurial companies from Silicon Valley who in different ways were themselves and their companies responding to the Secretary of Defense's outreach to Silicon Valley and the Defense Innovation Initiative more generally. This panel discussion, the theme of this event is like that one, but a bookend in respect to the fact that we're going to talk about how the big and established companies in aerospace and defense fit into that public policy context, and frankly a very topical business context, quite apart from the public policy backdrop to it. I am compelled to make a couple notes here. First, the entire event is public and on the record, and we are live streaming it over our website. So if I call upon you during the Q&A period, and there will be one, certainly by the time we get to about 5:40 this evening, I'll make sure and begin taking questions from the audience. When I call on you, please wait for the microphone. Our staff will bring you a microphone so that the public record can recognize who you are and where you're from before you ask your question. Moreover, we are tweeting the event. Is this true? We are tweeting the event at, help me, at AC Scowcroft. We are tweeting this event at AC Scowcroft, and if any of you, I suppose even in this room, let alone those watching on the live stream, would like to, put a question into the conversation, you can tweet it. Dia, our staff here, will bring me the interesting questions, and we can be all 21st century about it that way. Finally, the event will conclude sharply at 6. So as that hour approaches, if we're still involved in working our way through a series of hands up, help me out there, and try when we approach that 6 o'clock period to get into sort of a lightning round of short questions, short responses, so that we can actually draw in all of the questions that are resident here in the audience before we have to close at 6 o'clock. Okay. I've alluded to the fact that we're going to start the program with a short presentation by Miriam Hock. Miriam is, as I've said, the director, a vice president and director of research at the National Venture Capital Association. One of the things I am not going to do is belabor each of these panelists' biographies. That's why we hand it out to you, and if you didn't get it, you still could. Pieces of paper that have their full bios on them. In the interest of time, not because any of them is lacking in distinction that I would want to call attention to, but only in the interest of time will we dispense with that. Miriam, I'm very grateful for your coming, and I think this will get the conversation off to an appropriate and fast start. Thank you.
Thank you, Steve. Steve hounded me or tracked me down last week to come present today, so I'm very excited he was able to find me because this topic is very important to NVCA at the National Venture Capital Association, where we focus on a lot of different segments, different sectors, and just understand how venture capital and various corporates are intersecting in a very interesting time in the venture capital industry. So as Steve alluded to, my name is Miriam. I'm the VP of Research at NVCA, and since I can imagine NVCA is not a name that you all probably know, given the number of associations that are in this town, a quick primer on what NVCA is. We are a Washington-based trade association, and essentially we serve as the voice for the venture capital industry, meaning the startups and the VC investors that are in the US that are investing in the broader entrepreneurial ecosystem. We do this by advocating for obviously policies that are important to investors and startups, convening various groups, including a corporate venture group that we have in our membership, and also advancing the industry through providing data and thought leadership in forums such as this. So I don't want to start, I guess, too high level, but just to make sure, I guess, we're all clear on when we're speaking, or when I'm speaking of venture capital, what I mean. I wanted to kind of walk you through essentially what we think of when we think of venture capital from the policy side, and what I would imagine the panelists today are also thinking of when they think of venture capital. But at the very high level, venture capital is really the rocket fuel that powers innovation and entrepreneurship in the U.S. It's startups that are disrupting industries, services, businesses that exist, and are trying to find new, unique ways to solve for problems. It's really venture capital is really the only industry that creates new industries, again, in this more disruptive manner, this disruptive spirit of how it operates. And just in the past 10 years, we've had so many new industries crop up from the way that the life cycle of venture capital has evolved. And then, of course, if you think of the number of companies in the U.S. or around the world who can trace their roots back to venture capital, I mean, these are really important, powerful companies that have impacted all of us, whether on a personal consumer level or on a business level. and truly is kind of shows the power of venture capital. A fun fact, if you look at all of the companies that are public today in the US, and the ones that went public after 1974, 42% of those trace their roots back to venture capital. So there's definitely a big sort of venture impact beyond just the industry in terms of the startup, but in terms of the kind of the future pipeline of public companies in the US. And actually the 5 largest companies today in the US by market cap were all once venture backed. So just interesting to note. So if we dive a little bit deeper into why venture capital is so important for a startup and for a company, if we kind of look at the development of a company, and as time progresses, when company starts from just an idea to where it really develops a product, grows, matures, and then is kind of a well-functioning, revenue-generating company. And we kind of look at the investment that's needed for that company. So at a very early stage, there are seed and angel investors that are providing capital to startups. As you kind of move down the spectrum, you kind of go in from the early stage to the late stage side of things. So these are essentially kind of segments where we have different venture investors that are deploying capital into startups across every industry. And so who are the investors that are doing this? So it's a range of institutional venture capital firms, some names that you may have heard of, such as Sequoia Capital, Kleiner Perkins, Menlo Ventures, but also corporate venture capital groups play a huge role in this ecosystem, as well as angels, incubators, growth equity groups, also just other groups that are more non-traditional in sense that have shown a lot of interest in this industry. It's become a pretty diverse group of investors. So let's take what we kind of know about venture capital and go a bit deeper into corporate venture capital. And corporate venture capital is essentially a type of venture capital. As I just mentioned, corporates are one of many investors that are investing in the venture ecosystem. Corporate venture capital is typically going to be from a corporation that's investing for non-control equity stake in a company. So that's important to note because this isn't a strategic acquisition. It's a non-controlling stake in more of a strategic investment role, which I think the panelists will probably do a much better job of explaining exactly how that works. Also, most corporations are going to be investing off of their balance sheet, so off of the parent or the corporate balance sheet. Some of them also will have dedicated funds, but just to note that it's kind of a different model than what a traditional venture capital fund would be investing through, because those are sort of third-party blind pools of fund from institutions such as endowments or foundations, whereas a corporation is really investing off of their either balance sheet or funds directly from their corporation. And then also, corporate venturing spans all industries. It's not just tech or aerospace and defense. It's healthcare, energy, hardware, media. It's really, anywhere there are large corporations, there is this need to focus on innovation and R&D, and we'll get to that in a moment. But that's, important to note that it does span all industries and pretty much all investment stages. So if we look at what are some of the benefits for corporations when they are investing in startups. So I think the 2 big ones here are strategic value for a corporation and financial returns. And different corporations kind of operate differently in that one might be a little bit more important than the other. Some are equally as important. But in terms of the investment, it is a investment of capital for an equity stake in a company. So there is the inherent idea that equity stake will return some sort of capital back to the corporation or from the investment. Also, the strategic value is huge in terms of companies needing to innovate and stay kind of relevant with all of the startups that are disrupting different segments, whether this is an R&D pipeline or it's just a way for the corporate to create partnerships or look at building their core business or looking at new businesses. It's really more of a strategic sense or a strategic lens for them to get industry trends and insights, or even think about a potential pipeline of M&A or expand to new markets, whether that's different segments in terms of different sector segments or adjacent segments or even geographic expansion. And then for the startup, what's really helpful or kind of what the value is that the startup receives from a corporate investment is obviously there is the capital. That's very important, this risk capital for a company at a very, very early stage. But corporates also provide strategic guidance that's in some ways unique than what a traditional or institutional VC might provide, just given that the corporate is going to have more, probably be a better resource in terms of partnerships or manufacturing or getting a better sense for the competition in a certain market. Also, resources that come with the corporation are huge. I mean, most VC firms have, I would say maybe not more than a staff of 10, whereas you think about large corporations, that's, it's 20 times that. Also, introductions to other investors are very important for startups, and then also the technical expertise that comes from some of these corporates or these larger corporations and their broader networks, I think can be hugely valuable for startups. So I hopefully set a good stage in terms of what venture capital is, what corporate venture capital is, and why it's important. And so I'm going to dive into a couple of stats that will give you a sense for just quantifying, I guess, the venture capital and the corporate venture capital industry. And then I'll dive into aerospace and defense sector specifically. So this is all venture capital in the US over the past 10, 11 years. And the blue bar here is the capital that's been invested into the industry, and the yellow bar is the number of deals that have been done. And you can see a steady increase since about 2010. In 2015, we hit a 10-year high. 2016 is on pace to probably be second, right behind 2015. Obviously, those 2 years are going to be behind where we were in 2000 in the dot-com era. But what's interesting, or just to shed some light on what's happening as we've been seeing this increase, is on the deal count side, we're seeing more sort of micro VCs and angels and early stage companies coming into the venture capital space. But on the investment capital side, we're seeing large investments into late stage companies, as well as some non-traditional investors that I mentioned earlier that have been more active in this space. And then also a lot of this has come from corporate venture capital. A lot more interest in the venture capital space from corporates across the spectrum. And so if we look solely at the corporate venture capital activity, so this is looking at solely the number of deals done where there was a corporate involved, and then the capital amount here, the blue bar, is actually taking for any deal with a corporate, the total round amount for that round. So it's not actually just isolating the corporate amount, it's actually the total round amount, but it's only for rounds that had a corporate included. And you see it's kind of increased in a parallel manner to what the overall VC industry has seen. And in 2015 and 2016, corporates have actually participated in 13% of all venture capital deals. And actually, since 2012, we've seen 1,700 unique corporates invest in at least one deal. So it's a huge kind of segment of the broader venture capital space that's definitely getting a lot of interest. It's a number of players that are established, that have been in this market for a while, such as the Intel Capitals of the world, to some that have become very popular, not popular, but I guess more active recently, or in the past 5 or 10 years. Such as like Google Ventures or Salesforce Ventures. And then actually we're hearing almost every week now of new corporate arms being created, from ones like JetBlue to Campbell's Soup, and even Sesame Street has launched a venture fund. So it's a pretty wide space of activity from the corporate side. So where are corporates investing in terms of the sectors? So I guess you can kind of see here immediately, it's pretty much all sectors that corporates are active in, but the software sector is really where it's kind of led the interest from corporate venturing groups. And interestingly, the aerospace and defense data, which we're going to get to in a second, it kind of overlays a couple of these sectors in terms of it could be somewhat related to software, or it's going to be included in the other section here. But I just wanted to, again, kind of give a foundation of, broadly where are corps very active in, or where they continue to be active in the venture space. So now we're going to focus specifically on the aerospace and defense sector. Again, this data is actually, I forgot to mention, this data is actually coming from PitchBook. So if you are curious, happy to talk about that, but we just wanted to clarify that this is all being sourced to PitchBook. So if you look at just the aerospace and defense VC activity, we kind of see that there has been a steady increase since 2012. actually, since 2012, $1.5 billion have been deployed into about 220 VC deals. You'll see the spike here in 2015, and I'm going to just note a couple of large investments that happened here, because I'm sure you're wondering, what happened in 2015. So two notable deals I would say from 2015. One of them, actually, the largest deal, had corporate participation. It was for a deal called for a company called Planet. So they're a developer of satellites for monitoring and communication purposes. So they raised $131 million. So that's a chunk of that 550 or something over there. Also, another deal was called Icon Aircraft with $100 million investment. That one didn't have any corporates, but that's also a huge chunk of that piece there, and they're a manufacturer of light sport aircrafts. And then in 2016, you'll see we're on track to do pretty well. Two large deals that happened so far in 2016 are Airwave, which develops hardware and software for commercial drones, and Enlight, which does fiber lasers for various industries, including defense. And so now if we look at just the corporate venture investment in the aerospace and defense segment, we'll see it's definitely picked up since 2012. It's again, in a similar manner, kind of spiked in 2015. One of the reasons behind that was also that Planet Labs deal. Another deal that is a large deal from 2015 is 3D Robotics, which develops smart aerial drones. So since 2012, so in the past 5 years, about $500 million has been invested in about 30 aerospace and defense corporate deals. And I will say that this is probably a lower estimate in terms of what the activity that's actually happening. From a conversation earlier today with Chris, who's going to be on the panel, I think a lot of some of the deals in the space do get underreported. So I would say this is probably a low estimate in terms of the activity that's actually happening. So just to, I guess, juxtapose this graph with the one I just showed, and you want to see maybe what percentage corporates are of all of venture. Here we see that corporates make up about 15% of the VC deals in this space. It's a bit lower than it was, you'll see, from like 2006 and 2007, but you may remember that the denominator here got larger in terms of there are just more deals happening in the segment. And we are seeing, I think, more institutional and traditional VCs see opportunities in this space. So it's exciting to see, and I think those two forces kind of complement each other well, and I'm excited to hear what the panelists say or have to say about some of these trends. But I will be sharing a copy, or Steve and team will be sharing a copy of the presentation tomorrow, I think. Yeah.
We'll have it on the website together with the summary of this event if you'd like to download it.
Yeah.
That was just perfect. Really gets us all up on the step, maybe the second step of the whole topic. Before Miriam sits down, are there any questions about the presentation? Seeing none, thank you very, very much. And I would now ask the panel, please, to come join me on the stage. Take your seat. Yes, thank you. See, I told you.
Oh, those names.
Right.
Wow.
Do I get to go last? I want to go last.
All right, if you'd like to.
Yes. Oh, but I can't. Right here.
Terrific. I've asked each of the panelists, whom I will introduce ever so briefly in turn, to start by giving us a few minutes of orientation to their companies, their to some degree, I suspect, filling in their particular answer to the sort of questions and motivations and structures and other things that Miriam did such a great job of outlining for us, just to get us all oriented to what we're talking about here and where everybody's coming from. And then we perhaps will dive in a little bit deeper. I'll go just like this. No, is that okay, Brett?
Yeah,
I mean,
yeah,
Brett?
yeah.
All right.
Yeah.
We'll go right left to right. I will simply start by mentioning that Thomas Dallouin is the Chief Executive Officer at U.S. Venture Investments Airbus. And again, while I'm not going to read his biography, it's available to you. Having said that, I also have invited each of the gentlemen, really encouraged them to say a little bit something about how you got to this point, and, kind of what your personal venture to being involved in corporate venture in aerospace and defense is. At the beginning or end of your introduction, but include that, please, Thomas. Okay. Thank you. Get us started.
Excellent. So thank you, first of all, Steve, for
Very welcome.
inviting us, and I'm feeling very humbled just sitting here with my colleagues. I mean, a lot of experience in the aerospace and defense sector. So here, we want to talk about corporate venturing, right? So giving a bit of taste of why Airbus Group, as a company, decided to set up venture. So I think it has to come back to kind of the roots of Airbus Group as a company, as a mothership itself. I think back in the 60s and 70s, actually, Airbus Group was just a startup. It was a small company. It was a bunch of people with a dream, kind of a concept that somehow in Europe, we could build something in aerospace and defense that could be greater than the sum of its parts, right? So it was back in the 60s, trying to challenge the establishment, the US establishment, so the players, and very well-established players, trying to be disruptive. So basically, the startup mindset was part of the DNA of the company very early on. And then we moved from this like very startup stage to a company that grow, that make one product, a portfolio of product, expand, go outside of Europe, leverage the collective intelligence, and ultimately ended up being a global player in aerospace and defense, 140,000 employees, present in all segments of the landscape, but not losing this kind of part of our own DNA about startups and disruption. I think we want to stay connected to that ecosystem, to that grid. So that's probably one of the first arguments that pushed us to move to venture capital. The second reason, I mean, Mariam, you did a fantastic presentation, but you did not mention the location for the investment. I think if you look at the 80 billion you mentioned in the US, I think roughly 2/3 of this 80 billion are invested in Silicon Valley. And that's a fact, right? I would be happy it would be more diverse, but the fact is Silicon Valley is kind of the heart of venture capital. There's a density of activity there, a density of player, of talent, of money. So for us, mothership sitting in Europe, looking at the Far East, looking at the Far West, we had to be global, so we had to be in Silicon Valley. So trying to be in Silicon Valley, I mean, will take time. I mean, it's just a very, very early stage for us, but we'll see over time if we can play, let's call it a role in that very specific ecosystem. But Silicon Valley was kind of a very, very targeted focus for us. And finally, I would go to a very last reason, and it's a bit about the dynamic of teaching and learning whenever you engage with startups. So if I use my native language, French, we would translate teach and learn by the very same verb, which is apprendre. The subtlety of the English language make it a difference whenever you teach something or you learn. The French would couple the two because they see that as the two sides of the same coin. So for a corporate like us, back to the roots of a small startup having grown up and having scaled, we want to share that experience of scaling back to the startup. But in return, there's this notion of trying to learn a bit of a different angle on some of the global challenges we're facing. So again, the idea of a venture vehicle was kind of trying to answer all of those questions. So Navi, having said that, like answering the why we are on the venture stage, let me give you a few elements of what we do and how we do that. So Airbus Ventures is actually an independent venture fund. So to the classification Mariam explained earlier, so we tend to see the world of venture capital and corporate venture capital, right? I think we sit pretty much in between, right? We sit in between the ecosystem of startup, very close to them, and the mothership and the experience and the expertise of half a century of aerospace and defense challenges. So we are set as an independent structure, which means for us, we have the possibility to decide and operate freely and make an investment within days if we want, which is very, very unusual for corporates to get that level of autonomy. And well, there's no free lunch, right? So if we make this greater speed of execution as a main driver, we also had to give up a bit of the strategic content. I mean, you mentioned what we can bring to the startup, and indeed corporate venturing usually bring a complete menu of strategic options, like partnership, IP, licensing, access to facilities, contribution in kind. But it takes time. if you want to develop that with a startup, it takes time. It takes not weeks, it takes months. So if you want to trade that and against a bit of like the speed of execution, well, you cannot promise to any of the startup that they will have whatever they want out of Airbus. The only thing we try to do is to promise access to the mothership, but we do not guarantee outcomes, right? So the idea that we will sit next to the portfolio company, helping them to grow, to scale, sharing a bit of that DNA that Airbus Group has given us, but at the same time operating at the speed of Silicon Valley and the speed of startup was kind of the main driver of our vehicle. So again, what is a bit different in the traditional classification is we literally sit in between, using a fund, an independent fund, and autonomy of decision to try to cope and manage the pace of innovation and disruption. So in few words, in a few minutes, that's a bit what is Airbus Venture.
That's great. Although I have one particular question for you before we proceed down the line, and that is a number of the people in the room will be familiar with or aware of A3.
A-Cube.
How does,
yes.
Sorry, A-Cube. How does
problem.
A-Cube fit into the realm of what Airbus is doing in Silicon Valley? And even tell the rest who don't know what it is what I'm talking about.
So I'm not a representative of A-Cube, so
Right.
I will not make the official communication for them. But what I can say is we do have the same father, Tom Anders, the CEO of Airbus Group. That was part of this vision. I said we wanted to be present in the Silicon Valley ecosystem, and that's a very complex ecosystem. So venture is just one part of this ecosystem. There's a lot of university, there's a lot of innovation, there's a lot of implication of public and private money, both coupled and blended. So A-Cube is actually sitting in like the traditional innovation stream with a bit of a disruptive unit, a DARPA-like or Google X-like type of structure that is actually doing stuff, like doing project and doing initiative, when Airbus Venture is investing into entrepreneurs, external ideas, external concept. So yes, it is complementary. Yes, we do work together, but we have two different mandates while having the same father.
Good. Okay, thank you. That fills out the portrait. Brett Lambert. Brett Lambert is the Vice President of Corporate Strategy at Northrop Grumman Corporation, former Deputy Assistant Secretary of Defense for Manufacturing and Industrial-Based Policy. Brett, tell us about Northrop Grumman's play in corporate venture.
So we have a bit of a different take than my colleagues up here, and you know, it'll over the next few years we'll figure out what's been more effective for the customer, which in our case is warfighters and taxpayers. The history of Northrop is a conglomeration of a whole bunch of different companies. Northrop Grumman, TR Ventures was the last official, in your words, the official venture fund we had, which was run by, as it happens, our current CEO, Wes Bush, when he was out in California. When I was in the government, we looked at a bunch of different models for trying to exercise the innovation and motivate the innovation of commercial technologies, a lot in Silicon Valley, but not necessarily in Silicon Valley, and to try to figure out how to incorporate those into the defense operating base. And so what you've seen, I think, over the last few years is a maturation of frankly, cries from help from the customer. Big companies, which we all represent, people have heard me say this before, we're the dinosaurs, and they tend to knit sweaters, and when they feel it's getting colder, they try to applique, and obviously the department is looking for feathers. They're looking for innovative companies that can get product and can keep the pace of innovation going, get product to the warfighter as quickly and efficiently as possible. So when we look at efforts like DIUX and some of the other innovative projects that are out there, we really view it as a cry for help and a legitimate cry for help. So we've taken a bit of a different approach. We don't have a fund, but we are looking at models that what I call ingestion is how do you take the best of innovation that's out there in the commercial marketplace, and you can run the R&D numbers, and whether it's synthetic biology or across the board, a lot more money going into commercial products. How do you access or tap into those capabilities and ingest them into the products and capabilities that the warfighter is crying out for, and is obviously clear in all the documentation that's come out. And the reason, I think, when you look at startups, particularly in Silicon Valley, but elsewhere, the ability for them to get into the defense cycle, let alone their willingness, let's assume they're willing to do that, but to innovate and to get through the bureaucracy, I think that's where the real challenge comes, and frankly, that's where we think large players in the defense industry can be of assistance in both identifying and then bringing them through the channels. So dealing with the IP, dealing with the cost accounting, all of the stuff that makes people not want to sell to the Department of Defense or any government agency. And so how do you identify them, perhaps invest in them and take a minority stake, but at least give them an avenue to service the customer. On the other side, the customer is a little leery when it gets down, speeches aside, when it gets right down to it, they're worried that these startups won't be around for the long haul. They won't be there for 10 or 20 years. The dinosaurs are still going to be there for a while. So our model is we're working at identification and ingestion of commercial capabilities, commercial investments into products that then we can help service and remove the burden for the startups of the cost accounting, the IP issues. Let the companies who do best with that kind of difficulty, let them handle that part of the equation, and then commit to the customer that we're going to be around to service and support the endeavors over time. So
Okay.
Our ingestion model is not a fund. It is a fund because it comes from corporate coffers like everyone else, but it comes from when we can identify a capability and ingest it into a product that we're committed to service the customer on.
One more time, what was the name of the, I think it was a TRW entity that Wes goes back to?
TRW Ventures.
TRW Ventures.
Yeah.
Right, that's
Quite successful.
It was back early part of the aughts, I think.
Yep,
Late 90s, early
90s, early 2000s.
Yep.
Yeah.
A technology that ended up as a critical feature of cell phones.
Many,
Eventually.
and many other things.
Yeah,
That
yeah.
apparently they did not get the right IP for.
You got to do that part right
Yeah,
too.
right.
Very good. Chris Moran is the Executive Director and General Manager of Lockheed Martin Ventures. Chris is based out in Silicon Valley. Thanks very much for making your way across, as is Thomas, the continent. Please, orient us to Lockheed Martin Ventures.
Let's orient you to me first. How about that? Because I've only been.
I'm sorry. That's right. You two dodged that, so we'll come back. We'll come back on
I think
that.
these guys can orient me better to Lockheed Martin Ventures than I can. I've only been with Lockheed for 4 months, so I'm just learning this massive corporation. My history is I spent and am still living in Silicon Valley. I've been there 30 years. I was at a company called Applied Materials for 32 years in various roles, 10 years of which I ran the venture fund, started and ran the venture fund at Applied Materials. And that's how I ended up here. The people I worked with there found their way to Lockheed Martin, and they wanted me to do the same thing.
Despite the connotation of the name, Applied Materials is a semiconductor
Yeah,
firm.
semiconductor equipment firm. So I've been in Silicon Valley basically my entire career and living in that environment. And Lockheed wanted to have, as you both had said, wanted to have a presence out there. Now Lockheed does have about 5,000 people, I believe, in Sunnyvale, Silicon Valley area. So it's not like we're absent, but we've never had a specific venturing activity there to tap into the ecosystem of venture that Thomas elegantly spoke about. And I think that's the part of what I'm trying to do is exactly what they're saying, is look for external technologies, figure out how they can indeed complement programs that we have or programs that we can create, but use the effective ecosystem of Silicon Valley to do that. And so Lockheed Martin has had a venture fund in one way or another. I've learned recently since the mid-'80s, believe it or not. The most recent reincarnation was in 2007, when it was called the Emerging Technology Fund, and now we've renamed it Lockheed Martin Ventures. But the focus that I'm trying to bring to it is sort of shift or reshape the focus a little bit and try to move outside of this direct kind of defense procurement sort of activity that they've been in, looking at later stage technologies, how can we bring them directly into programs, and trying to look at more of this vast environment of things that go on out there, the ecosystem with the venture capitalists, the technology startups, and so on, and start looking earlier at technologies that maybe not only fit into programs already going, but could be the catalyst for programs yet to come. And I think that's where the real value is, because I'm not going to be able to tell the thousands of Lockheed fellows, that you're doing the wrong thing or anything like that. But I can certainly show up with a market basket of technologies and capabilities that allow them to pick and choose and watch the creative juices flow in their minds about how they can apply some of these technologies into the systems and programs that they're working on. So my operational mode is to have a very close relationship with the various business units. We have regular discussions, meetings. Basically, I want them to tell me their problems. And then, my skill is to kind of connect the dots between a problem and potential solutions, bring those back into the corporation, find out their level of interest, and then we'll dig in deep and do diligence on companies to make the investment. And we'll invest for all the reasons that Marion talked about, Thomas talked about as well. With the ultimate goal of getting access to that technology, usually through a license or a partnership. Lockheed hasn't bought any of the companies they've invested in to date, but in my old firm, we bought several of the companies that were in there. So that's an exit strategy as well for those companies. So a little bit of a shift, trying to look out to the much earlier stage to give us a much bigger. Lockheed loves to use the term aperture, so much bigger aperture on the opportunities that we look at, but also figuring out how to bring those in, as you so elegantly talked about. How do you get the company to be interested in the defense space? How do you get the company to want to operate in that space? And how do we provide, for an engineering term, an impedance match between the commercial industry and the defense industry? And that is a recipe I'm still figuring out. It's only been 4 months, so I've got a couple. They gave me 1 more month to figure that out. So anyway, that's our focus right now.
Excellent. That's perfect. Thank you, Pete Roney. Pete is the Vice President for Innovation and the Managing Director of Explore at Thales Group. Pete's based in Boston, I happen to know. But go ahead and pick up from how'd you get into this seat at Thales, and then I'll come back to you other two gentlemen here.
Sure. Okay. Well, first, thanks, Steve, for having us here.
Welcome.
And real quick, a little vignette. I do these things from time to time, and it's funny when you walk around the United States and people ask what company you're from, and you say, and they see your name card or something, and they say, "Oh, you're with Thales." You immediately know that you've never done business with me. And about a year ago, I was at one of these things in a room that was about 3 times this size, and so I wanted to test the hypothesis. So I got up there, and the first thing I said is, by show of hands, who's actually heard of Thales? And exactly one person raised her hand. And I had to point it out to her.
This room can do way better than that.
I had to point it out to her in
you.
front of the whole group that wasn't fair because we had had lunch together about an hour before. And so the reality is that many of you, I'm going to guess, have not heard of Thales, and that's unfortunately common across the United States. And so one of my missions in life is to help spread the good word. So why don't I give you just a very quick sense about Thales, and then I can tell you a little bit more about me and what we're doing with Explore. For many of you, you do know Thales, but Thales is a global conglomerate that serves both commercial and defense and aerospace applications. We do things like securing a very large portion of the world's financial transactions. We're second in the world in in-flight entertainment. We handle large, obviously, like the rest of these guys, command and control information systems for militaries and governments around the world, avionics, commercial and military, space systems, transportation rail signaling systems. Cybersecurity is an area that we're spending a lot of time these days. So the company has about 70,000 employees and truly global. In the world, though, while you might say on the surface we're the 9th largest defense contractor, in the United States we're sort of the blip on the blip on the blip at the end of the radar. I mean, we are nobody here. And please don't quote me on that one exactly, but
It's going out on the web.
yeah, Bobo's back there taking notes, and that's going to show up in the journal cover tomorrow. But really, so Thales is a large, significant company in the global aerospace defense market. But in the United States,
How much sales, just to put it in full perspective?
Ballpark
Global?
15 billion euro.
15
in
billion.
that neighborhood.
Not a small company.
So but if you go back now, roughly 3 years ago, we had a then chairman, Jean-Bernard Lévy, and now followed by Patrice Caine. And Jean-Bernard sort of looked at Thales and said, wow, growth has stalled. I wonder why that is, and took a very deep look at what had happened. And what he recognized is that the entrepreneurial and the innovative spirit had sort of gone dormant, which I'll take a risk here and might say that that's happened to some others as well in cases. And so he challenged a lot of us to figure out new ways to bring it back. And one of those that we identified was we really have to figure out a way to touch this startup world because they happen to be doing some pretty creative things that could become a problem for us, like SpaceX, for example, and others. And so we thought then, of course, where are we going to do this? And so if you look at just the sheer number of patents and startups coming out of the world, the United States is, of course, Mecca. So here we are. We decided that we would either pick Silicon Valley or Boston. Why Boston over Silicon Valley? To be quite honest, it was because of cost. Thales is somewhat conservative when it comes to cost management. And so we picked Boston over Silicon Valley, but I will come back to that point a little bit later. And our mission there has been and continues to be to find new and disruptive technologies and business models or services that can either be complementary or disruptive to our own business, and look to partner with them in creative and novel ways. We set up Explore to be somewhat a unit on the edge of the boundaries of Thales to allow it to have some freedom. Shocker here, we have some processes that stifle freedom every once in a while. And so Explore sits on the edge to sometimes get around those and come up with novel ways to partner with businesses and bring new things to the market. The way we do that is through a various group of means. We, like others here, don't have a dedicated fund, although you might see that change in the not-so-distant future. But we do have a fairly robust operating budget that allows us to be flexible in the ways that we partner with various businesses. And by partner, what I mean is we have a concept in mind, for example, and we will find startups that help us fill gaps in our own portfolio that round out the technology or the market access that we need to bring that concept to life. And in those circumstances, we will, quote, invest in the business. And it might be an investment in a technology or an investment of other forms, but the whole goal being delivering a particular concept to the market. And a couple of examples, just real quickly, our first big project was we took a military avionics helmet-mounted display, and we made a neurosurgery product out of that called Dragonfly. So we're here to talk about largely defense, and I think what you'll find in Thales is that because our group is so pretty much evenly split between defense and other commercial applications, we tend to take use a pretty big lens when we think about how we deploy our capital when it comes to this stuff. With the view, though, in the long term, that a lot of these technologies that we're working on can bounce back into our core markets if necessary. Personally, for me, just by way of background, I started off in the defense community as a military officer myself, and then worked my way through the defense establishment in both industry with General Dynamics, and then other forms, management consulting with Renaissance Strategic Advisors, who I see well represented here, and now with Thales. So.
Okay, excellent. As promised, let me just come back once to Thomas and Brett for how you got into corporate venture.
Right. So, well, I was trained as an aerospace engineer, and I've spent the last 15 years within Airbus Group. So I've seen, on one very bright side, the beauty of like this collective intelligence coming together and building products from like various cultures, different size of players, all together on that kind of endeavor. But also the rise of complexity and a bit of the loss of this ability to be agile and nimble, especially when I went to China. I was based out of Shanghai, and the pace of change, the pace of innovation that you can feel just walking in the street in Shanghai is just mind-blowing. So the combination of that, plus I was very close to the product, move afterwards to finance as a chief of staff to the CFO. If you do the combination of manufacturing, finance, and a bit of that quest towards agility and nimbleness, you end up in ventures. So that's pretty much the path. So.
Good. Brett, I've given away a little bit of your background, but
mine's
everyone
not
here
really
knows
that
already.
eloquent. So I had worked on with a consulting firm, which was called DFI at the time. It's now the corporate side is Avocent. We sold the government side to Dedica in the UK and back in 2007. But over about the 15 years, I was doing management consulting. It was mostly for either the big dinosaurs or small entrepreneurial firms that were trying to become dinosaurs. And then after that transaction, I served on a couple of technology boards and then went into the government, as you said, in 2009, left in 2013, and then went back on some entrepreneurial boards and some larger corporation boards, and then was asked to join Northrop as the head of strategy and to kind of think through all of these. I mean, when I was in government, I have to say I was very taken by a lot of the companies that would come in to see us. These were the SpaceX's and the Palantirs and everyone else, and just how hard it was for them to break through the bureaucracy, the walls that and really frustrating. I saw a lot of great companies that could have added a lot of benefit to the warfighters walk away from the department. Only because of the structural impediments, not because of the technology innovation capabilities, of the integration part. And so, as the department tried to mature through rapid equipping, which I think is a beautiful example of how, okay, you've got 12 months to get something to the field, that actually helped, and it started to train institutional memory inside the department of how quickly you could go if you were allowed to go that fast. And so, at Northrop Grumman, it's one of the things we're working on is that, how do you take that entrepreneurial spirit and get it into the hands quickly of the warfighter and take the burden off of these entrepreneurial companies who have a lot of investment. Some of them have already been venture backed. Take the burden of dealing with the Department of Defense or any government agency. Remove that burden from them so they can actually do what they are incentivized to do and what their passion is.
Yeah.
So.
There's a thread here that I'd forgotten goes all the way back to DFI, actually. Each of you has made reference to your chief executive officer. And I happen to know each of your chief executive officers. These are not incidental sideline initiatives that each of you represents. Correct me if I'm wrong, or just take a pass when I come to you if I'm wrong. I'm interested. I think the audience would be interested in how involved in and what's the sort of corporate strategic from the chief executive officer's desk interest in. That wasn't a full English sentence, but tell us about your CEO's interest in this initiative. Let's keep the baton going and start with Chris.
Okay. 2 weeks into my tenure at Lockheed Martin, I had to have a face-to-face with Marilyn Houston and Bruce Tanner, the CFO. And it was I had 2 weeks to get my concept of operations together and present that to them. So all of 2 weeks.
Great.
Talked to a lot of people to get to that point. But the feeling and the people who were briefing me on the discussion with her is that the company is so intensely focused on innovation. And honestly, even though we may be a dinosaur in your terminology, you couldn't last that long if you weren't incredibly innovative. And the company is astoundingly innovative. Everything I see, the things that you say, oh, I wish we did that. Well, they're doing that, But the intensity, the pace, I think the rationalization of government spending and the slowdown in certain areas, they see that the commercial space is going to have to offset that to some degree. And I think everyone and the comments from Ash Carter and so on indicate that you've got to look to the commercial space for those markets to rapidly develop some of the technologies you're looking at and try to figure out as best as possible how to bring them into the defense space. So that goes all the way up to the top of the company. They don't want to miss out on anything, and they look at this as just another tool to use to enable them to do that.
But at least in the case of Lockheed Martin, and each of you respectively might comment upon this on your way around, there is some impetus from the Secretary's outreach and innovation initiative to the,
Oh, yeah,
the
absolutely.
formation or the elevation now of this initiative?
But like I said, Lockheed Martin has had this for quite a while, but I think there's a new intensity at it. And we don't look at what they're doing or DIOX is doing as competitive. Actually, I've met with them several times, and we view it as complementary to them, right? Because at some point, these small companies have to figure out how to provide thousands of widgets, not the few that may come from those activities. So they're going to have to work with one of our companies probably to commercial, or not commercialize it, to move it into the defense space.
Yeah. I'm going to, right after this, I'm going to come back to the question of how you look and the sector looks from the perspective of the entrepreneurs that you engage with. But Pete, your CEO's stamp on this initiative,
Sure.
please.
So in the beginning, clearly our former chairman had a pretty significant stamp on this, and now Patrice Kane, who's our current sitting chairman and CEO, views Explore as I think you've already said, as a tool in the toolkit for the broader innovation and digital transformation initiatives that we have going on. And to put a bigger point on that, Patrice has laid out a vision for the digital transformation of Thales. It's an overly used buzzword, I know, but it really does mean something for Thales. We're over 100 years old, and to evolve to stay competitive with a lot of the businesses that are now starting to step into our markets, we have to change the way we do things, both internally and how we work with our customers. And so in this particular case, Explore has a proverbial seat at the table when it comes to the digital transformation office that's helping to shape the future of where Thales is going in this new economy. And so, therefore, the projects that we bring forward tend to be fairly high visibility projects, and oftentimes the blessing and the funding for these types of endeavors comes directly from Patrice or the CFO.
Okay. Thomas, my awareness of Tom Enders's interest in this arises not least from the number of times he is said to pass through Silicon Valley. For the chief executive of a global aerospace company, it's quite striking. I think he's hardly a stranger to your offices.
Definitely. I mean, Tom Enders is very connected to Silicon Valley, to the US in general, but to Silicon Valley. But I have to say, when you set up an independent fund, it has to come from the top. I mean, it's a non-natural move for corporates to give up control and say, guys, here's money, here's a playground, spend the money. Right? It's a very bold move, and it was Tom's signature. So he's the architect of venture together with the CFO. So that's kind of the good combination, because you need the money, not just the power, right? So because the power without the right envelope would not make any difference. But the combination of Harald Willem, the CFO, and Tom Enders, literally sending the impulse, and at the same time kind of defining a bit of the boundaries and the limit of the game and the playground by setting a bit of some financial and business boundaries through the investment thesis. So yes, we do invest in things that are strategically relevant, right? That's our mandate. But when you've said that, it's so open to us that it's enough to be free and operate. So, and again, it has to come from the top if you want to set up that as an independent structure.
And you've nearly said, but let me get a point on it, and you're supposed to make money. You're supposed to generate a return.
Exactly. And usually in the classical kind of classification, you tend to caricature and say the VC are financially driven and the CVC are strategically driven. The truth is we all want to be both. I mean, that's a fact. Even the VC want to be some sort of strategic player at some point, right? So yes, we do have a very strong focus on financial discipline and financial return. But at the same time, we want to be strategically relevant to the mothership on the long run.
Just in the outline that Miriam gave us, really.
Exactly.
Wes Bush, stamp on this interest at Northrop Grumman.
Well, I think the one thing you're seeing all in common is it comes from the top. All right. So Wes running TRW Ventures when he did in the late 90s and early 2000s saw clearly the value of investing in and incorporating or ingesting more commercial entrepreneurial technologies, and that's carried through. The models are all different, but I think the one common theme among all four of us, I would say, is the CEO and the board, with the board support, is very entrepreneurial, and more so than I think people sometimes give large defense companies credit for. I take your point. I don't mean to say when I talk about dinosaurs, more in mass than in anything else. But but incredibly entrepreneurial and a lot of very great innovation. But nobody can dispute the fact that the investment dollars going into commercial, particularly sand, I call it steel to sand. Defense companies are set up to do steel things, and now 80% of the money is spent in sand, and spent in silicon. Well, that money in the silicon, in the IT, and the communications, and the network of things, and all of that, there's much more money being poured into the sand part of that equation from the commercial environment that we should be tapping into. And I think all 4 of our CEOs realize that. And so it's not so much that let's figure out what's going on and try to replicate it. Let's figure out what's going on and try to ride it and help our defense customers.
Okay, perfect. So I said I'd be interested in your testimonial, if you will, about the entrepreneurial counterparties to your transactions and searches, and certainly the immediate impetus for this question is the really interesting, it would have to be said, ambivalence that those 4 CEOs from Silicon Valley, these entrepreneurial CEOs who sat on this stage last April, expressed toward the defense sector, the Defense Department, investors that had a defense interest in their technology. Each of them, they were here, after all, so that was some testament unto itself, but they also were Charvelat, who was there was a woman who's the CEO of a company called Savionics, and she was about to go do some fundraising in New York, and she looked at the camera and said, I hope none of the investors see me here talking about this, because it's not going to help me raise money if they know I'm interested in defense. So anyway, what I wanted to draw out from you is what would it be, reception on the entrepreneurial end of this when, gosh, maybe not a dinosaur, but a big aerospace company comes knocking and says you're interested in something because you think you or your customer have a problem they could solve. Anybody want to launch into that? Or should we just put the baton? Brett?
I think they're quite receptive. I mean, I think the struggle they have is the same struggle that all of the major primes have, which is it takes so long and it's so difficult. In the venture world, everyone knows about the Valley of Death, and I used to refer to the entrepreneurial spirit of innovation for defense as the summit of death. So you have a great technology that you can identify, and you find somebody, and then they say, okay, there's, the Department of Defense is not your favorite uncle, but he's your richest. He spends over $1 billion a day, but in order to sell to the Department of Defense, you have to find somebody like us. Then you take your product and you start climbing these stairs, and you then have to hire some consultants to tell you how the Department of Defense works, and then you probably get some people on your board, and then if you're really successful, you get somebody to take you as a subcontractor, and you pay them a 15% tribute in order to run that through the contract, and then eventually you can become a prime contractor. And if you're a prime contractor, it means you have to have Deltek or some cost accounting system that could be certified. So you've spent probably 18 months of the development life cycle doing nothing but process and not innovating at all. And then you fall off a cliff and now you're a defense contractor. So I think what all of us are trying to figure out is how do we grab those people early in the process and then ingest them into our products and services, take the best that they have to offer, but not lock them up in this horrible march to the summit.
Anybody else want to reflect on your, Pete, engagement with entrepreneurs?
Sure. So a couple of thoughts. I think we see it, for us, it's fairly binary. And by that I mean this, that if we go knocking on the doors of an Airbnb or somebody of that class, I really don't think they'd be so interested in chatting with us.
Right.
On the other hand, though, if we go, and we've done this quite a bit, obviously, into the Valley or New York or Boston or Austin and other places, and knock on a 5 or 10 person shop that's got some cool deep learning technology that we think might be able to apply to something we're doing, we usually get the first, well, who's Thales? And then so we have to go through the, well, Thales is, this and that. Whatever, we're French, it's okay. But then we get over that, and we get to the point of, oh, by the way, we're in over 60 countries around the world. We touch 5 of these giant markets where your stuff can apply to every one of them. Virtually every one of our products can use what you do. So would you like to work together? And that discussion usually moves pretty quickly from that point forward. And by the way, we've got a fairly strong balance sheet. That helps too. And so, you know, and our last two deals were in the neighborhood of $400 million.
Show them the money tends to work.
Yeah. So you know, it's talking to those kind of businesses when you kind of, for us, it's less about here's how we're going to help you navigate the Pentagon. That discussion will clearly come at some point. It's more, here's the access. We represent the two things that are most important to you, which is money and access or growth. And if we can figure out, if we agree that those two things are important to both of us, then perhaps there's reason for us to carry on the discussion.
Chris?
I have an anecdote. So
Great.
within the first couple of weeks I had joined Lockheed, I sat on as a judge on a venture panel, right, reviewing cases. We had, I don't know, 25 or 27 companies presenting, and just on, and social networking and media this. And part of the reason I did it was to renew my contacts in the venture community. But during the first break, you know, it was all social networking based in Nigeria.
Software.
It's crazy. But during the first break, 3 or 4 people came up to me and said, "Oh, we didn't know Lockheed Martin had a venture fund. I've got this, you know, this security deal, or this drone thing, or this cyber thing that I'm just trying to find the access point in there. And I try to talk to the business units, but they don't ever return my calls. It's good to know that you're here." And so, you know, it's not like we've got to go beat people into working in the defense space. There are people that want to work in this space. They just have no idea how to get into it. And so to your point, you know, providing them that roadmap and access, making sure they know that we're here, is a big benefit to them. And we get lots of calls. I get lots of calls now from that one meeting.
You're going to get more now.
Yeah, hopefully. But that's the point. You know, you want to be visible. And to the point you were making, a lot of the deals we've done in the past don't show up on the you know, on the record. Like, nobody knows we're doing this. And so part of what we have to do is be much more vocal and visible about our activities, so that people know who we are, where we are, how to get in contact with us, and these are the things that we like and would like to work with you with.
Good. This will help, which leads to my last question, after which I am going to take questions from the audience, so be ready to raise your hand, and we'll march through some questions from the audience here. But my last question is apropos of what you've just said, Chris, and that is, pitch us. Tell us what you're looking for, what size, stage, geography. Is it steel, sand, software? Pitch us. It's a big audience. I mean, it's an important audience.
Right.
Good. So I think I just want to rebound very briefly on what
yes,
Chris just
I
said.
forgot,
No problem. And it's linked to like pitching. I think we've seen exactly the same kind of appetite from the entrepreneur community. So there is obviously a renewed interest for aerospace and defense topic. And that wasn't probably the case 3 years ago or 5 years ago. It is the case now. We see that in Silicon Valley, on the East Coast, throughout the world. The theme of aerospace and defense, by the way, is not isolated. It's not one category. It's usually linked to element of IT or automotive application. It's just very transversal. But this appetite to do something for us, for aerospace and defense, is real. Now the problem is exactly what Chris mentioned and what the panel discussed, is the access to the big players. It's very complicated to talk to a big Lockheed or big Northrop or big Thales or big Airbus Group. But our vehicle, very small, very on the ground, very human interaction, people we can talk to, people you can interact, are actually a very great gateway back to the mothership in a big debate. So when they come to us, they really ask questions about certification, about technical capability, about test facilities, and we can guide them. And that wasn't easy before for them. So I think literally on that aspect, there's a shift. And we have the duty to nurture this shift and make sure that these little startups have the playground to develop those technologies. So we've positioned Airbus Ventures on the seed and Series A, so very early stage. We want to take them very early to guide them on that path, offering the scaling and the access to the mothership. We're chasing technologies that are linked to the future of flight in general. So more specifically, we talk about challenges in urban air mobility, connected vehicle fleets, advanced propulsion and system, and digital manufacturing, to make it simple. So it's a lot already, but it's always something not specific to aerospace and defense. That's what we've seen. Those companies address other verticals, not maybe at the same time, but there is like very transversal effect.
Okay. Brett, pitch us.
Well, I think we're interested in, I put it into two buckets. One, let me start with the transformational bucket, which is, and there, the list that you would see in any third offset paper you've seen. So the autonomy, the machine learning, all of the things that we are currently investing heavily in better understanding, are we investing in it when there are other folks out there who have already figured it out, and would our money be better spent applying our resources to encourage them or to invest in them or to ultimately acquire them if that was necessary. So there's that bucket, the next generation bucket. There's also a bucket of, given the financial situation that the Department of Defense is in, and I think regardless will be in for some time, of application of new technologies to existing platforms. How can we lever sunk investment in platforms to make them more robust, make them more agile? That can be communication systems, it could be new ways to network them. So it really falls into those two buckets, the kind of the third offset bucket, but also the ability to applique new technologies and innovation into existing platforms and capabilities, whether they be ours or somebody else's.
Chris,
Pitch me.
pitch me. Pitch us. Pitch us. What are you looking for? So that your phone can ring even more.
Yeah, no. So it's a great question, and you don't even want to tell people it's defense.
There's that. Right? Yes.
Well, not because I scare them away, but when you say defense, you think of tanks and ships and battleships and and fighter jets and so on. But for me, I have to break those down into the components. What am I going to? I'm not going to invest in an F-35, right?
Yeah.
Where do I get one of those?
No, you have invested.
Yeah, we all have. But it's the pieces, it's the components of it. From the materials used to make the wires on a spacecraft, for instance, right? Where you're so worried about the swap, the size, weight, power, and cost of the thing, and anything that can do that, or anything that can make our production line more productive, right? Which gets to software and logistics and inventory planning, and not very sexy things, but things that are all developed. You look at what Amazon's done for logistics. Well, could we use that inside our company as well to improve our costs and so on? So there are all manner of things like that, from the hard technology to the softer technologies, on top of that cyber and so on. But anything that shows up on a spacecraft or aircraft, whether it's an antenna, a semiconductor device, a radar, a radio, even the glass in the cockpit window, all right? Any manner of things like that potentially has some use in what we're doing. So in a way, there's nothing I haven't looked at that I can't kind of flip over this way and that way and figure out there's some use inside the company somewhere for it. And so it's just the matter of finding, like I said before, connecting the dot between this new innovative technology and a known problem or a known area that I need to improve, or someone's told me I need to improve, and making those two things happen together. The other audience I have to pitch, by the way, is inside the company.
Right.
And people don't realize that is I have to sell the deal inside the company too. So I'm selling myself and the capability of the company to the startup, but then I have to sell the deal internally. So I'm pitching inside as well, the technology, the team of people, their experience, their track record, how this technology works, how it's better than the alternatives, because I have to look at 3 or 4.
Right.
To say this is the first one. It's not the first one I met. It's the best one that I've met that I want you to look at. And as you do that, you realize that Lockheed's got hundreds of fellows, right? And these folks are the pure research folks.
Literally called that, by the way. Is that right?
Lockheed
fellows.
Lockheed fellows. I think everyone has an equivalent to that. And they're doing basic research, but part of that basic research is to scour the startup world too. So I have competition. Inside the company, looking at startup companies, and I'm trying to get them to talk to me before they talk with them, and sign a contract or give a right away or something that maybe would be a problem for us down the road if we wanted to have a much bigger strategic activity with that company. So I'm pitching both sides to get started.
An observation, if I can just make it, is that maybe contrary to, I think, some of the caricatured expectations of big defense companies relative to the entrepreneurial or venture sector is you actually have as much trouble corralling the amount of engagement going on out there as finding or as
there's
drawing them
tons.
out.
No, I'll go to companies now and say, oh, I saw so-and-so from Lockheed Martin, 2 months ago. Oh, great.
Yeah.
Or somebody say, oh, we have a contract with you guys. I'm like, what? Who? With? So half the time I'm trying to do detective work, figuring out who's had a touch point or contact with this company, and why am I finding out indirectly as opposed to a direct connection with it. So.
All right, Pete, so after you said, we are from France, what's your pitch?
Yeah, well, like Chris, though, we have the harder pitch is internal. I'll just say that. And I won't go into the detail of that except to say it's painful sometimes. The external pitch is really, as I spoke about how we do things, which is very project focused, and then bundling sort of how we deploy money around a project. Our pitch is, look, we're going to try and do something together. We have a customer who's already in this loop with us, and we use very much a design thinking sort of approach in how we do things. So customer X is sitting here, and oh, by the way, customer X could be one of the world's leading airlines or one of the largest train networks in the world or whatever it might be. And that customer is sitting here. We're going to invest in this technology with you and in that customer. Nobody owes anything, but what comes out the other end is something that all of us can use together. And by the way, as we talked about earlier, we happen to be a world leader in this market that we're investing in here. So what's the benefit for you, the startup? Hey, it's really no risk, but if in a year we have something, then we're all gonna, the high tide will lift all the boats in this case. Usually that works.
Okay. I have, you're all aware, looking at your own watches, I'm going to have to start the Q&A with the lightning round because we're down to a short few minutes, but I also don't see any hands, but now I see one. Quickly, please, with the microphone, and then this gentleman here will take the second question.
Hi, Michael Bruno with Aviation Week Space Technology. Traditional VC in Silicon Valley works in an ecosystem. How does it work with you all? Do you have the favorite Kleiner Perkins or Bessemer Ventures or whoever you partner with? Try to find these deals?
One of you want to grab that, Chris?
I wouldn't say we have favorites, but it's preferred. I think all of us would prefer to partner with somebody. It's called syndicating the risk. We'd rather do that than do it all our own. Because if we funded the venture entirely ourselves, then it's like doing internal R&D, and that's the leverage we wanted to get on it. So we would like to syndicate with other institutional VCs, or even with these guys. But who knows? So yeah, we'd like to share.
I think that was implied, Miriam, was it not, in your statistics of the A&D corporate venture deals? Is most of them the corporate venture tranche was one of several tranches in the deal.
I think it was about 15% of the
Right.
Right.
Yeah.
Right. That was the statistic right here.
Yep.
And then the woman in the second row from the back, please.
Jacob Markish for the Renaissance. I'm going to posit that there's sort of a spectrum of investment types and relationships with the BUs that you guys all have to deal with. One is far field technology, which the BUs aren't as interested in, and you have the advantage
Which
of
the
having
what aren't?
the BUs are not as interested in
Thank you.
directly,
Yep.
immediately.
Yep, business
And
unit.
you have the advantage of agility and speed and sort of single point decision of engaging with those companies, but the return isn't as obvious. Relevance for the company isn't as obvious. The other end of the spectrum is technologies that are very relevant to the business units, the divisions, which is great, but the issue might be, as you intimated, there might be some competition from the divisions, and there might be a question of, well, why are these guys in a corporate unit doing this when this is my job? Yeah. How do you balance those two ends of the spectrum? How do you think about maybe the kind of path from the one to the other?
I see you nodding. Brett, you want to take
Well,
that one?
I call this the Q quotient, and we had the same problem when I was in the department, which is companies think quarterly, and our markets think quadrennially, long cycles. And so you're right. I mean, that often happens. Usually, you guys have probably seen the same thing. When you take it to your business unit or your division, some new technology or capability, they look at it, and if they really like it, what they'll say is, we could do that.
I have a whole list of those statements.
And then you say,
we
well,
did
why
that,
would we do
or
that?
we did that.
Right.
Yeah.
So there is that hurdle, and it is, internally is as hard, if not harder, than external, I think, in some of the larger firms. But you have to understand that if you're dealing in a kind of a fit-up cycle, a 5-year cycle for the business units, what I think all of us are interested in the technologies, either that can do something very rapidly or that can prepare the company and the organization for something further afield. And that middle ground is where it gets hard. But I think in those two buckets, it's much easier to both convince internally and to shine a light on capabilities and technologies. I mean, when we think about advanced technologies, third offset and things like that, whether it's synthetic biology or other capabilities, these are 4, 5, 6-year cycles. They get out of the budgetary planning for any one company or any one business unit because they're too far out. But we, as company leadership, understand that that's where we need to start positioning ourselves for the next generation of capabilities the customer is going to need. And so that frees up some space. But that middle ground, 1 year to 4-year production, is hard to sell internally. It's harder to sell internally, I think, than it is externally.
I'm just going to add, in my little experience bringing entrepreneurial companies to defense contractors, this is a critical issue. This timing cycle thing is a big issue. I have more than one instance where you bring a technology to one of your companies. They say, we just closed the critical design review last week, and it won't we won't develop this product or redevelop it again for 5 years. But when we do, this will be a great thing. You know. I'm going to take the last question, even though I think there may have been some other responses to that. Please.
As Marjorie Sensor with Inside Defense, I just wanted to ask, what are the metrics that you look at? How do you know if you're succeeding? Does it need to be profitable? That's my question.
Okay, we'll go right down the line on that, but starting with Pete this time. Metrics.
Yeah, good question. In the long run, the number one metric is to grow the top line for what we're doing. So it's probably a little bit different than a VC. In fact, I know it's different. That being said, we are interested in return on capital. So what we deploy should generate a sufficient enough return that it's worth our time. And then I would argue, or not argue, I'll tell you as well that Thales also sees an intangible benefit coming out of this, and that's something I discussed earlier, which is what is the brand doing in the ecosystem here in the United States and around the world, and how is Explore and our innovation platform globally helping to enhance the brand to help, of course, the greater Thales do more.
I put down in my concept evaluation 4 key benefits. One was the learning. I mean, we haven't talked enough about that, but just the knowledge of the spaces that we look at.
Apprend.
Learn and teach. But when I go to one of the PIs inside Lockheed Martin and say, we've been looking at antenna array companies, for instance, so we looked at 5, and they may have looked at a couple themselves. They didn't look at 5, and we look at the entire space of things on there. So there's knowledge imparted to them, and they may look at more. So and we're trying to do that across all the sectors that we invest in, and providing them value that way. I mean, certainly growth would be great if we could do that, but it's hard as a small startup company to say we grew a $50 billion company from where we are. We might have been a component in a proposal, for instance. That would be great, and we'll keep track of those. But the learning, being able to help them with gaps in technology, roadmaps, plans, and so on, so bringing those technologies in. But the other thing that is sort of new to at least this fund in Lockheed Martin is providing what I call hedges or alternatives. Right? To answer those guys who said, "Oh, we can do that." Well, okay, good. Right. I'm going to do this, and if yours doesn't work, then we have this. Right. So, the focus on mission success is where I'm trying to get people. And does it really matter if you did it or if somebody else did it? If we got the contract, if we got the proposal, then we all win. And so that's a concept that we're trying to rationalize with the folks there as well. So I have those four areas to look at.
Excellent. That's a great, good question.
So I think one of the benefits of, if you're an entrepreneurial company, of dealing with somebody like us is that we're not likely to have a sheet like you would have in a typical venture fund, or when we used to work with funds that said, okay, you have to be, the rule is you have to be accretive to earnings on day one, or you have to be. So it's much more nuanced than that. It is, from our perspective, does it add value to what we're trying to supply the warfighter? Can it get us to market more quickly, and does it provide a differentiation? And the financial parts of that structure are much more flexible than you would see in a typical venture fund that you deal with, just because we're trying to spread that, both the risk and the opportunities across a very wide, large portfolio. And so that would be the other criteria, is how can the technology play across the portfolio of opportunities as opposed to just a single opportunity.
So just briefly, so in our case, we do measure the way the venture capital do measure the financial return. So the very strict return on the money we invest is something we measure because we think it's important to keep track. And I think all corporate venture does that. I mean, it's just a myth that we're not looking at financials. Mm-hmm. We do. Now, to measure and get a KPIs on the strategic return, that's a very subjective question. But I think in our case, the mandate is to disrupt the mothership before someone else does. So if I come back to the BUs and I have a discussion and everybody's happy and everybody smiles, there's something wrong. I need to have people in the room feeling, a bit shaky and things like, this is not okay, you should not do that. I should sense a bit of uncomfort in the way we bring some of the technology back. And that is the kind of KPIs that say, maybe I'm on the right track or maybe not. But that's a bit of the answer.
If it's too comfortable, you're probably on the wrong track.
Exactly.
All right. Well, I'd said I'm sorry. I'm gonna abide my promise to end at 6 o'clock. Forgive me. But when we're done here, please come up and speak to these gentlemen or Miriam if you have a further question that time did not allow for. I'd mentioned that that this is a bookend of a conversation that started last spring with some entrepreneurial companies. And I think it's been perfect. It has really complemented, filled out a conversation which I had thought had some wooden caricatured features to it, mostly attributing not from the government customers so much as from observers of this innovation initiative and the outreach to Silicon Valley, some wooden caricatures of how the big defense companies are participating in this. So instead, this conversation, I took away the following sort of mottos for how big defense companies are engaging with the entrepreneurial sector. I've already invoked one: apprend, ingestion, aperture, and not we're from France, but on the edge, working on the edge. Right? Those are more like the real life of big companies in aerospace and defense working with the entrepreneurial sector. And I appreciate and thank each of the four of you and Miriam Hawk for bringing these ideas and insights and disabusing us of some of these wooden caricatures of how big A&D is participating in this to this conversation in this audience. Thank you very, very much. Thanks all of you for coming.